Good morning, good evening, good afternoon, wherever you are, whenever you are. Thank you for watching my videos. And you need to turn down the volume here. Let me just, I hear an echo. And I'm going to shut that down. There we go. That's much better. Forgot my lighting too. There we go. All right, that's much better, even better. All right, so anyways, I'm here joined with Inti Campo.
Good morning, people. How are you today?
And it looks like your camera is actually working right now, so that's a good thing. We are going to be talking about several things. One is the coronavirus stimulus has come back to haunt China with bank runs. Then we're also going to be talking about basically what the Federal Reserve has said in their announcement yesterday, and also we're going to be talking about hyperinflation and what's going on, what's going to happen in the future when we go through the final hyperinflation. Also, Cardano. Oh, Shelley has finally released, and we're going to see what that means and talk about what that means and whether or not you should be invested in Cardano right now. Now that finally Shelley is here, so it's supposed to take off to the roof, to the moon. Yeah, okay. All right, we're going to talk about that as well. But before we do all of that, we're going to do some TA, and then we're going to do, after we talk about all the things that we're going to discuss today, we're going to do some question and answer. But before all that, Inti has a few words to say.
Yes. As always, people, it's worth to remind you that this video is for entertainment purposes only, and this is not a financial advice. Please do your own research before putting any of your hard-earned money on the market.
All right, awesome. Quick question to all those people that are out there watching this video. What do you think about this new setup layout here, right? With all this information and stuff like that. What do you think about that? I just wanted to get your opinion on that stuff because I think it's pretty cool. I don't know about you guys, but I like it. All right, so let's head over to the charts. And hey, India, let me get your opinion. What do you think? What do you think about this layout, the new layout of the video?
Yeah, it looks really cool.
Yeah.
I would like that the chat is in the top right, in the bottom right corner.
Okay.
So when you pull up a chart, it doesn't bother seeing the time scale.
Really? When I pull up a chart, oh, so you're missing the time scale? Where? The time scale's at the bottom right here, as you can see.
Yeah, I mean the other scale that's always on the left.
Well, on the right hand side, my right hand side, looking at the video, the prices on the right hand side, so it's not blocking the
Oh, perfect! I just received a couple comments, but that was it.
Yeah, so the only thing is blocking is what.
It's the tools.
Yeah,
excellent. And so, it doesn't even bother the ticket.
Exactly. So I like it.
I like it too.
All right. So with that said, we're looking for some more price action, and Bitcoin is just not giving it to us right away. Right. We'll just have to be patient, of course, and we will get our blast off section here very, very soon. It is overextended, looking overextended on the weekly, but markets can remain overextended for long periods of times if it chooses, right? So especially since this is Bitcoin. We're not fully overextended yet on the daily, which could mean that we could just pop up a little bit and then come back down. I'm a little concerned that this line this is the line in the sand this is the resistance line, basically. This yellow line here that we've blown past finally. Are we going to check it and then go? Who knows? Let's see what happens. If we do check it, we're going to blow out a lot of stop losses here before we go higher. But let's just see what the days and weeks brings to the price action. I think that we're not going to check it just yet. I think we'll probably have to go a little bit higher before we come back and check this area, in my personal humble opinion. Of course, anything can happen. You could decide for yourself how you want to play this game. Right? If you want to play this game and you don't want to use your money to play and lose your hard-earned money, you could always, you could always use BTCmex's money, which is actually right here. Oops, wrong side. That way. You can see that I have like a link to BTCmex there, and you can actually use their money because that will give you 0.1 BTC to gamble in these markets and see if you could actually earn something off of there. And so if you falter, you know what? You'll be using the casino's money and not your own. All right, so just remember not to stay too long in the casino because, you can actually get hurt. Okay. Over here, I have in our Telegram group, we are waiting for the entry level, and I'm sharing this with you, of this entry level here, and we might not get it. Looking at the the fact that on the lower time frame, actually, let me take a look at the lower time frame. So I'm seeing like a lot of pressure to go higher and not dump down further. I think it's time for us to start nibbling here. Not a whole lot, not like anything more than 0.25% loss of our total deposits in any exchange. So for example, if you deposit any money into the exchange, like let's just say you deposit 0.1 Bitcoin, as an example, you should only use 0.25 or less of your money and as a loss, take a loss, and then you can augment that with of course leverage. But you don't want to do too much leverage because your stop loss has to be really all the way down here at $10,585 approximately. So that limits the amount of leverage you could actually possibly use, because even at this entry level, that's 2.2%, and so you don't want to be liquidated on the way down. Should it gets all the way down here. So you want to make sure that you have enough powder to at least exit the position before your liquidation occurs. Okay. So with that said, let's talk about what's going on with China. Man, okay, so let me see. Where did I put the links? Jesus, and I lost them. Hang on, I'll get those links back up again. But first, let me just switch screens. So yeah, China is going through almost like a bank run, basically, because what's happened is their stimulus has gotten people nervous that there might be, the banks don't have enough money to cover all the money that's in the banking system in China. And currently, there's like $13 trillion worth of money in the banking system in China, and it's like ridiculous amount of savings there. And it's all in the Chinese yuan. And here I've finally got the link up, right? Basically, there's lots of rumors. So first off, this is the stimulus package that they gave out during May, and that's basically what's gotten people nervous in the last little while. And so over here, I have another link, and I'm going to bring that up as well. It's copy. I can't believe the links are missing, but here, let's go over here. And you can find these links in the description below. Yeah, spat of a bank runs breaks out in China, fueled by social media. So it's all social media's fault, right? See, if you didn't have social media, Inti, right? Mm-hmm. If we didn't have social media, there wouldn't be any bank runs. That's what this news article is trying to say, right? I'm like, really? Alrighty then. I'll let you know. Okay. Social media fueled rumors about banks collapsing are popping up in an unprecedented frequency in China, forcing regulators and even the police to step in and calm depositors. Just calm down, man. Calm down. It's all good. We're just going to steal your money. Don't worry. Keep it there so we can steal it. Oh, man. Just since the past month, worried savers have descended on their banks to withdraw funds amid rumors of cash shortages that were later dismissed as false. Over the weekend, customers rushed to a bank in northern Hebei province to take out money, pumping local regulators to publicly vouch for the soundness of its lenders as the police halted the run. Yeah, you're going to have to go home now. You can't take your money out. And don't worry, it's all good. Don't worry, we got you covered. We're going to steal the money, but don't worry. You just go home and let us steal it. So, it's so sad. That's just the way it is. We've had hyperinflation events, and they're not going to steal it directly by taking it out of your account, of course, right? They don't want people to riot. They're going to steal it by slowly inflating the currency and taking all that money out, right? And regulators are now not only seeking to soothe nerves publicly, but are also raising the protection to preserve this cushion for banks. The run in Hebei came after authorities kicked off a pilot program to limit large transactions in the province. Yeah, okay. So, yeah, you know that those people, they have reason to fear. The more you prevent people from using their own money, the more fear they have that something's going to happen. And you know what? They should fear it because hyperinflation was invented by the Chinese, practically, when it comes to paper money. I know. Yes, we've had hyperinflation before. China invented paper money with silver and the what's it called, and the metals, other metals, base metals into the coinage, and then caused the expansion of the money supply, and then we had hyperinflation. But the Chinese mastered it because I remember reading that we have a total of, throughout history, we have a total of over 5,000 hyperinflation events. 5,000 hyperinflation events. And 3,000 of them, right, approximately 3,000 of them was attributed to China. And so these people have a long history of having hyperinflation and protecting their wealth through gold and silver. So they know the value of gold and silver. And I was like looking for the definition of hyperinflation, and I found interesting thing. I was looking for the number of hyperinflation events so that I could show you guys that, but I couldn't find it. So I found this though that was very interesting. That some economists say hyperinflation occurs when the cumulative inflation rate over 3 years approaches or exceeds 300%. Wow. Well, I just assumed like 300% in 1 year was hyperinflationary, but no, 3 years it's hyperinflationary by other economists. So if we see, so basically if we see a Big Mac triples this year, right? Not 3 year, over 3 year term, just in 1 year. I'm going to call it a hyperinflationary event. But other economists will be calling it long before that. Very interesting indeed. All right, well, let's go on to Cardano, which has finally released. Cardano introduced proof of stake with Shelley hard fork. And basically what that means is that they are allowing you to stake your coins. But I'm looking at this, I'm reading this. Cardano will reach consensus equilibrium once 1,000 stake pools have been established. 485 of which are currently live. So what? You have to stake your currency in a pool? Yeah. I really have a problem with staking in pools. I think individuals should be able to stake their own currency and earn interest on it without having to go to a third party to do so for them. Yes, it's true. It can be a little bit complicated at times, but going to a third party just creates the same issue that we currently have with our financial system, right? Everybody talks about a gold standard, right? But a gold standard is only trusting somebody that's been proven to be not trustworthy, which is the government, because they promise to allow us to withdraw, to take our currency and convert it to gold at any time, and then they took it away, destroying our value of our money. And so we can't trust ever again a government to do so, ever. So if we can't trust a government to ever again do so, why are we going to trust a bunch of people to stake our currency, right? Because I'm sure at first, yeah, just like the government, they're not going to steal it. They're not going to do anything untoward. But over time, that's going to happen, right? And so we can't allow this. I don't think this is a good idea. If you have to go to a pool to stake your currency, not a good idea at all. Now, of course, you're saying, well, wait a second, Davinci, not a lot of people are going to have like the number of coins they need in order to stake it. That's why I think for proof of stake to truly function well, I think you don't need you shouldn't have a specific number to get put into a stake into a currency, because in order to earn interest, I think everybody should be able to do it, in my personal opinion. I'm not sure what the technical problem is with that, but I think there shouldn't be a specific number so that people can grow their currency without having to trust a third party. Sure, you could say, well, as long as there's multiple third parties, not just one, that'd be fine. But coercion isn't the number one thing that the government is really good at. So they're really good at rounding up a bunch of people, and especially, it's not the government per se; it's individuals that are good at this. They're what I see coming in the future, right? As staking becomes more popular in the group, what you might have is government people in that have large amounts of money being staked are going to go to the government to create regulation so they can steal your money. And that's what regulation is all about, is just stealing your money. Is making it legal for them to rob you, right? That's exactly what's happened to Bank of New York Mellon, right? When they got caught robbing your pension plans, the government said, okay, well, we can't put them in jail, so we'll just make it legal for them to steal your money. That's what the regulation means. They'll just make it legal for them to continue doing what they're doing. And you can look that up, right? That's the way our government works. That's the way the system works. And eventually, those groups of people who stake right now, they're going to figure that out. And they're going to go and do that. So that's why I don't agree with pool staking. All right. So that's all I have to say about that. let's head over to the question and answers for today. Hopefully I haven't forgotten anything. Yeah. Oh yeah. You know what? Before we go on to that, I want to talk a little bit more about BTCmex. If you're interested in opening up account, what you have to do, I'm gonna. You know what? I forgot to put this in the description below. I'm gonna do that before the end of the show. Is all you have to do is head over there and type in the link that's below. Right? You don't have to type in this big complicated link that's here. You can just type in btcmex.davinci15.com. Deposit like 0.2 bitcoins and you can get 0.1 to trade at any time. You fill out this form after you deposit the money, and they will deposit it within 3 working days, and then you can start trading and see if you can like multiply your bitcoins by trading. Of course, right? Be careful out there. Don't get into the habit of losing your money, right? Lose the house's money. Right, that's what they're trying to do. They're trying to get you hooked on gambling. So just remember that's what they're trying to do. So don't let it happen. All right. Let's get on to the first question.
Yes. So this one is a question from yesterday. This is from Eliot Sharkey, 1996. Sorry if I pronounced your name badly. And he or she asks, "Can you give us your opinion on the Fed announcement?"
Yes, that's right. Okay, so the Fed announcement, they announced yesterday that actually they're going to raise interest rates in the very short period of time and cause deflation. They cause the deflation and all the prices of your houses and assets and stock market to go down. No, I'm just kidding.
You just scared the crap out of someone.
Oh yeah, okay. No, they're going to hold because of a spat of let's just see here. Where is it? Right here. The Federal Reserve leaves rates near zero as economic recovery sputters. Basically, they're going to hold it and then make changes until in what's it called, October, right, just before the election. And I'm like, yeah, okay, buddy, I'll let you know. You're not going to change anything. If you're not going to do the right thing right now, you're not going to do it in the future, right? They're going to there's going to be another emergency measure that occurs sometime in September, someday in September. I guarantee it. They're going to come out and do something. Maybe go negative. I don't know. They're gonna increase whatever liquidity that they need to do. They're gonna have some sort of emergency, and I do not see them raising interest rates ever. Period. Before we go into hyperinflation. Once we get out through hyperinflation, once we go into hyperinflation, maybe they might raise it a point or two. All right, you know what? I forgot to mention, right? I just realized. What do I think about Cardano's TA, right? I'm looking at this chart and I'm thinking, it's not terrible actually, but there is a problem here with the fact that this is, I do believe that there is a massive divergence in the volume, and that is very, very powerful when it comes to determining whether or not this market is going to go down. More so than the RSI and the MACD, and yet we have the exact same thing happening. So I mean, it pretty much guarantees that Cardano is going lower. Like, guarantees. That's how massive these divergences are, basically. And you can see from here to here, that was the next top right here, right around right here. And yeah, so you can see, whoopsies, this is not good looking good. So where do you want to buy this thing? You don't want to buy this thing up here. Forget it. That's for the losers who don't look at TA and they look at fundamental analysis and say, oh my God, finally Shelly's here. That means it's going to the moon. People are going to be staking. The coins are going to be disappearing from. Yeah, okay. All right. No, that doesn't work that way. Market doesn't work that way. It's buy the rumor, sell the news. That's the way the market works. The news has been broadcast to everybody. This is a liquidity event, meaning that, hey, you bought down here, you want to dump it up here. And there's the high probability, super high probability, almost a guarantee kind of probability, like 90%, that we're going to come back to at least to the 61.8. So that's where you want to be a buyer, which is at the 879 sats approximately. And yeah, we could go as low as the 78.6. I really think we're probably going to retest the breakout at level before we and that's basically either down here at the 88.6 approximately or the 78.6. Both are breakout points. Both are valid for where I would see the price coming down to, and being able to pick up some cheap Cardano, which 78.6 is what, 700 sats? Wow. So yeah, set your buy orders there. I mean, Shelly's not going to go. I mean, sorry, Cardano's not going to go away. It's probably going to pump like crazy during the next bull run for all for Bitcoin and the alts. So might as well get some. And I don't see it being an Ethereum killer, but it doesn't matter at this point. I think it doesn't matter what the coin does, as long as it stays alive and the developers keep it alive, it's going to pump. Period. It's gonna pump hard, right? Against Bitcoin, against dollars, against everything, because the reason why is altcoin is that people are going to see Bitcoin too high, they're going to see Ethereum too high, and they're going to look at all these other coins, no matter what coin you've got, and they're going to say, well, that's cheaper, I'm going to buy that. All right, next question.
All right. This question is a really important one, and I couldn't understand it until you explained it to me. And this is from Yahia 1980. And here she asks, why there is a big difference between physical gold silver and gold silver on exchanges?
Why is there a difference between the physical gold, silver, and gold on exchanges? It's basically because on the exchange, you have a paper gold, meaning you don't actually own gold. You own a promise to pay you gold that will never be fulfilled. And so obviously that's a lot cheaper than the physical gold, which actually has to ship to you and actually is real. So there's obviously the handling, the what's it called, the company that's actually selling you the gold, they need to have a markup. So they usually mark it up like 2 to 3%, sometimes up to 5%, in order to gain some profit, of course, right? And then of course there's the design of the gold, right? So if the gold coin is like a special design, a special case, there's more value. They'll sell it to you for a higher price. So this is why you'll have like even bullion. There's a price that's a small margin that they have to make in order for them to recoup their costs of like selling to the public, right? So they need to. They're in it to make a profit. So yeah, the stores that you buy gold and silver from online, they need to make a profit, and so they're going to mark up whatever gold. Now, of course, they do buy your physical gold at less than spot, and so that they can get additional profits from that as well. So it's generally they earn more than just 3 to 5%, but overall, that's their margin that they're looking for, 3 to 5%. All right, next question.
Next question. So this one is from Kev Allen, and he asks, in your view, is there something fundamentally flawed about proof of stake?
In my view, yes, there is. The fundamental flaw of proof of stake is that it can be actually the whole chain can be rewritten in an instant, right? There's no requirement to stop it from being rewritten with a sufficiently powerful computer in a short amount of time. And that's the weakness of proof of stake. It's not a rock solid history. It can be changed, right? Now, of course, there are ways for them to prevent that by creating in the software. They have checkpoints in the software, but at the same time, all you have to do is release an update to everybody that agrees to fork it off and say, hey, you know what? I don't think that checkpoint's correct, and then boom, you could have like two different currencies, right? That one says, okay, well, this is the actual correct path, and this one is like they can completely change the past history on this path, and then on another path, which is the one maybe you want to follow, which is correct. You would follow you'd follow the right path, but people are just generally stupid. They're going to go with, if the government can quickly do something, they will do it, and they will rewrite the history, and then force you slowly to go over to their history. And that's my problem with proof of stake. It's a lot easier to force people over to the wrong side of the history than it is on proof of work, because you have to actually do the work in order to fool people, right? So that's my 2 cents on that. All right, next question.
All right. So this one is from Lodiders. This person asks, "Hi Davinci, can you go over how to best disguise orders so as not to distort the market?"
Disguise orders?
Yes.
Oh.
Maybe he has some big orders and don't want to remove the market.
Yeah, I know how. Well, you don't actually go on the exchanges. You can go through dark pools, right? Some exchanges provide dark pools, so basically you don't have to show your hand and purchase. Basically, you could set a limit order without actually putting it on the what's it called, the depth of market, so that everybody can see that you're buying at that location. Another option is to actually set the buy order at that price by using automated systems. Another way is over the counter purchases as well. So you can find lots of companies that will do over counter purchases that don't affect that don't go onto onto the exchanges, so that you can see that people are buying. So, or for example, you find somebody that wants to sell a large number of coins, and you just agree on a price and a contract, and then switch between each other, and that's another way as well. All right, next question.
All right, this one's a funny one. Mm-hmm. This one is from Foku, and asks, "Could you give your thoughts on Dogecoin?"
Dogecoin. I can't believe. I can't believe that it's still around. But this goes to prove, right? This coin goes to prove it doesn't matter what coin what your coin does. This is a shining example of, hey, it doesn't matter. Your coin can do absolutely nothing.
Could be literally a meme.
Exactly,
And people's
literally,
gonna buy it.
and people will buy it, right? You can see that, and throughout its history, right, that it just pumps and dumps, pumps and dumps, pumps and dumps, and this is great for if you want to just earn some Bitcoin, because hey, it's going to continue doing that as long as this coin exists. So, is it the time to buy? Is this the right place to buy it? Sure. I mean, it's not the best location. I really think that it should come all the way back to where it started, and it looks like it already did that one time. And yeah, it already went right back to where it started. So, will it go further lower? Yeah, I think you're right at the 29 sats. You're right at the right position to buy this thing. And to get a double, because we're going to see this thing, go all the way up, probably to 150, 160, maybe even beat out the last high in the next bull run, because it's going to be an epic run, not just a simple one. I'm not telling you to go and bet the farm on this thing. I'm just telling you should have a little bit of money on this, so that you can profit from the run up, and all you have to do is sell half when it doubles, basically. Sell half when it doubles at 60 sats. Sell half when it goes to 120 sats, and you're good to go, right? And you get your base currency back, whether you price this in Ethereum or BTC, which, by the way, I have decided to include Ethereum as my base currencies as well. So I will be looking to earn money in both BTC and Ethereum, and also receive my payments of any trades in Ethereum as well, as an option going forward from now on. Because I think Ethereum is here to stay. I think Ethereum on this 5th birthday, it has proven itself worthy as a currency. And even though it's not a currency, even though it's used for running the Ethereum network and to running your smart contracts, I really see that as a currency, because hey, you need to spend it in order to use your smart contract, or to buy something, to trade something on the network. You need to spend Ethereum. So this is going to have some serious valuations in the future. So look for that. Look, I really suggest everybody also use it as a base currency. And again, if you haven't seen the video that I mentioned yesterday about why I use Bitcoin as a base currency, you should check that out. I'm going to leave it in. I'm going to leave it up as one of the videos that pops up at the end of this of our stream. All right, next question.
So this one is from GuideGSD, and he asks, there is a reason why you, Davinci, are not doing TA with the Eliot wave indicator.
I'm not an Eliot wave fan, honestly, and not that I'm not going to say I never will be. I'm not convinced yet that the Eliot wave is a solid means of predicting the market, any more than I don't like what's it called, patterns like the shark, the what's it called, I like the AB equals CD only to determine a point of returns. So yeah, there is some patterns I like, right, and head and shoulders patterns and stuff like that. But most patterns I just don't like at all. So because they're too subjective. They're like, I don't know. Does that really look like a the what's it called? The one, two, the phase counts. I don't know. It's too subjective, right? People say no, it's not, and maybe it isn't, and I haven't looked at it the right way. But for right now, it's from my point of view, is too subjective, and maybe in the future I will see something different. But right now, I'm not feeling the Elliott waves. All right, next question.
Next question. Cian Miller and many others were discussing about ERD, and he asked if you have any ideas since mainnet is tomorrow. Would you do some TA on it?
ERD, sure. Let's just take a look at some ERD, and hang on. I'll bring up the screen in a second. Don't worry. Don't have it. Wow. So they're gonna have a mainnet
Yes.
tomorrow.
Seems like.
Ooh, looks like it's near the end of its pump cycle then. 'Cause, yeah, the hype cycle is over, and look, we're nosebleed territory. I've already made 3 doubles on this thing. I don't expect anything more. I'm surprised I don't have another sell order, but maybe my sell orders have been being removed. I don't know what's going on. Right, I'm gonna have to figure out what's going on with that. I should have more sell orders, and I'm not sure why. I don't. That's weird. That is really weird. Okay, well, I'm gonna check all of my sell orders now, because like I'm seeing too many of them disappearing, and so I don't expect to sell it up here, actually. I really don't. So I'm considering, now that you've told me this very vital piece of information, of selling everything on the day of that what's it called, fundamental event, because generally what you sell the news, you buy the rumor and sell the news, and since their mainnet is going to be going live, I'm thinking I should just walk away, wait for this thing to come back, right, and then buy some more. But I've already profited, like, majorly from this thing, and and you know what, the little lady stays invested, right, and reinvest. There is no plan to sell. Oops, this has got to be a lot higher. There's no plan to sell everything you own in the little lady strategy. There's only just, so you remain invested, because you're gonna profit. Even if it goes to zero, let's just say this thing goes to zero. I've already profited. Maybe I buy back a little bit of all the profits that I've made, and then, I subtract from that profits, but I'm not gonna buy the same amount that I've sold out on. I'm gonna be buying a little bit less, so that no matter what, if this coin goes to zero, I've already profited. No matter what. That's the key thing about the little lady strategy. You don't lose out on the profits you've already made. So I'm probably going to stick with my sell order up there and just let this thing come back down, and maybe pick up some coins. It looks like I'll pick some up at the 78.6, because that's probably where we're going, and we might even go up all the way to 88.6, especially if this is a new coin. Most new coins, that's a breakout level. Most new coins come back to where they started, and so that's a 44 sats area, and I'm looking at that as the point of where I'm going to rebuy at the 44 sats. Now, if there's a lot of hype, a lot of people are going to push this thing higher, sure, the 61.8 might be a point where the thing comes back, bounces, and then continues a lot higher. So you should start your nibbles at the 61.8. If you really, really, truly believe in this coin, that's where you should be buying. And that that's a possibility that the market bounces off that area and then goes a lot higher. All right, one last question, and then we're gonna call it a day. Into
One last question. Okay, this one is from Flying Rice 909. He asked, since crypto exchanges are open 24/7, but the CME futures closes every weekend, won't that leave a CME gap every weekend?
not every weekend, because some weekends the price closes, and then opens around the same amount, same price. Or they don't count the wicks. Most people on the CME as a part of the gap. So if it wicks back down, like let's just say it closes down, and then it opens up, and then it wicks back down and back up again, that counts as a close of the gap. So not every weekend you will have a gap.
Wait, weeks doesn't count as.
Yeah, but because it's a cash market and it's not really directly connected, I think the wicks count on this one, because it's not because here's the difference, right? Which came first, right?
Mm-hmm.
The Bitcoin market, like for example, gold markets, right? Which came first? Did the trading it on the exchanges, or trading it on through a store? Obviously, you say, well, through a store, but then the exchanges, right? The what's it called? The what's it called? The commodities exchange. They started doing more and more. People started trading more and more on the commodities exchanges, and then people decided, okay, well, I just want to trade it in and out, and move more and more to the commodities exchanges, which got more and more manipulated and more managed, and then it becomes the only place where people will actually trade it. And so that's why you'd see, that's where gaps would count if it had a wick only, the gaps with a wick. But because most exchanges that we currently trade Bitcoin on is 24/7, right? And it's a lot better than the what's it called, the CME exchange, which doesn't trade 24/7, right?
Mm-hmm.
The gaps on the CME exchange the gaps by wicks don't count. But if you see a gap on a wick on the regular exchanges, the ones that we currently use that were traded 24/7, yeah, that counts. That definitely counts. Got it? Because there's more liquidity there.
Okay.
Than on the what's it called, the CME exchange.
Yeah. Okay. I see where you're going with that.
There's way more liquidity. Way more. All right, so yeah, that's why we don't count the wicks on the gaps.
I still have a different opinion, but I see where you're going with this.
Yeah, without the liquidity, right? That's why you don't count the wicks, because it doesn't matter. Liquidity is covered by
copying the behavior of the other asset.
Exactly. It started, for example, the exchanges where we trade Bitcoin right now have more liquidity, have more people trading there than on the CME exchange. So and they're just copying whatever prices that these guys have, and they don't. And so so you already see what's going to happen by looking at on the regular exchange, right? So that's the real exchanges where actual Bitcoins do move. So compared to where the cash market is. All right. So, well, that's it for today. Thank you for your questions, right? I really appreciate everybody watching my videos, coming to watch this show, and I appreciate people on Twitch, switching over to Twitch. I know that split the audience, and so we don't have a lot of people on YouTube. And that's fine. And we only have 250 people on YouTube, and I'm happy with that. I want to slowly move away from YouTube, and that's what's going to happen. I'm going to split the audience. So thank you for liking this video. Thank you for watching this video. And if you haven't seen the videos popping up here, please check them out. And we'll talk to you guys soon. Cheers.
Bye, people.